Well, good morning. This is Anthony Parent of IRS Medic. Today is Tuesday, January 2nd, 2024, and we're excited to bring to you another exciting year of the IRS Medic podcast. Today, joining me is Keith Redmond and John Richardson, and we've talked a lot about the problems of living and investing overseas, and we really want to go over some of the solutions available for you because, for a lot of people, we've been saying, hey, look, you got to renounce or what? But honestly, renunciation is kind of difficult for a lot of people, and there's a lot of issues involved. So really, I got to think this is true. And tell me if you agree, people, that there's opportunities in this world. There are some opportunities in this world that are worth the hassle and headache of being a U.S. person and have to deal with the IRS, unlike anything else. And so I think the thing is just sort of admitting to that and moving on with it and just embracing how awful it is and dealing with it the best you can, because there's definitely ways you can have success. There's definitely ways you can have success as long as you acknowledge what the issue is. So we have John Richardson joining us today, and along with Keith Redmond, global advocate for the American abroad. And gentlemen, I want to start off with this with you. And this is what I'm going to say to you is, again, totally remove yourself from the U.S. tax system or fully lean into it. And this is what happened to me. It was somebody from our podcast who contacted me, and I was discussing them last week. This particular problem. They are a high net worth couple, and they're seeking to renounce their citizenship. They don't really see the point of being a U.S. Americans anymore. They want to move back to their home country. And as I discussed with them, I said, okay, look, you are definitely going to be a covered expat, and because of your asset picture, we're going to have to do some pretty, we can avoid that exit tax, but it's going to take some work to do that, and some strategies to do so, and some tax shelters. And as I was explaining this tax shelter to this couple, I said, by the way, this exit tax is so good that you'll avoid your exit tax. But if you stayed a U.S. person, you would actually avoid income taxes, and you'd also avoid any wealth transfer taxes. That is, if you get into this tax shelter, you may remove the very reason why you're renouncing your U.S. citizenship. So that's where I left it with a couple to say, look, you got to really think about if you want to renounce, because you might not need to. What would you choose? Would you choose a world where, like, okay, if I do this, I don't even have to, you could trade up where you don't even worry about the U.S. taxes really much at all because you're in really, really good structures, or you're in a situation where I'm going to worry about this exit tax and maybe have to pay something, and then maybe I foreclose myself from re-entering the U.S. And so that's really the situation that I presented themselves to. So I want to just ask a question to Keith. Keith, do you understand that what I'm talking about here? That somebody's tax situation could be so complicated that their solution may be actually just fully embracing the U.S. tax system. Does that make sense to you, Keith?
It does. I mean, it does make sense. I mean, obviously, each case is weighted on its own merits, but that's why I always say to people that it is important to explore all of your options and to see what the best option is for you. For some people, it's to renounce. For others, is to continue doing what they're doing right now, maybe not being in the U.S. tax system. And for others, it's to embrace the U.S. tax system and move forward and look for opportunities where it's not going to be as an arduous process than it has been. So yeah, I hear what you're saying. It's just that's why I tell people that you have to explore all the different options and scenarios.
All right. Well, now I'm gonna turn it over to our. Thank you very much, Keith. I agree. Because
Happy New Year, by the way.
Yeah, Happy New Year. And when you embrace, then you could take advantage of the things, because the tax code has there's a lot of special interests and lobbies that go in there.
The only caveat, if I may bring up, is, and I'm not saying that for some people embracing the U.S. tax system is a good thing, and I'm not arguing with you on that. The only thing that I'm a little hesitant about is that when there are changes in the U.S. tax system moving forward, at times it can be detrimental to Americans overseas. So that's something to keep in mind as you are embracing the U.S. tax system. You see what I mean?
Well,
There's,
Keith, you're bringing up exactly the point. Exactly the point. And I think we could. I think we'll be able to illustrate that as we're going up. When you embrace it, how do you embrace it? And there's ways, and there's themes, and there's trends that usually, when you stick with them, you'll be okay. Once you understand how the IRS actually works, what their true limitations are. I agree, Keith, and we'll be talking about that a little bit more. I want to go over to John Richardson. I'm sure he has something to say about renunciation. John, do all roads really lead to renunciation, or should some people say, well, maybe not? What do you think here about what we're saying here? Do you think it makes sense where people should say, I am an American person and I'm going to own this 100% and take advantage of everything the U.S. tax system has to offer me?
Well, I think it's highly circumstantial. I think it largely, when you look at the renunciation thing, okay, the people who are under the most pressure to renounce are people who are tax residents of other countries, because, and I'm sure we'll get into this discussion, right? But you lean into the U.S. tax system, which means I presume by that you mean you want to think of your life and run your life as the U.S. tax system is the primary set of rules that you follow. And I think that can work for people rather easily who are not also tax residents of a second country where they have to comply with that country's rules as well. So I think it really depends on where somebody's primary tax system is, right? If they're a long-term resident of another country, one has to be very, very careful about embracing U.S. tax solutions, because often they are, create problems for the country of primary tax residents, of which, for example, if we look at the transition tax, the S-Corp exemption was something that worked very well for resident Americans, but for many Americans abroad who had corporations in their country of residence, to create an S-Corp would create a foreign corporation from the perspective of their country of residence, right? So, you got that problem. Obviously, if there is a cost to renunciation for a high net worth person, that cost needs to be considered. And a lot of these things just come down, I think, to being business decisions. Is it more or less costly to renounce or to retain U.S. citizenship? There are certain advantages, particularly for people who have assets in the United States that, if they renounced, would remain U.S. side as assets, but they would be non-resident aliens and therefore subject to a massive estate tax. All of these things have to be considered.
Oh, you just threw a bunch of cold water all over me, because, John, you bring up a great point. The problem, and this is why you just can't say, hey, look, there's a blanket easy solution. This is unfortunately a thing. This is why it's worth it to find out, because you're right. Because and actually, this is what I wanted to talk about, Keith, to explain, how you position things so that which way the IRS is going to go, so that you'll generally be safe. Because you're absolutely right. If you create a U.S., let's just say, if you're living in a foreign country, it will have worldwide income, and you may have to be reporting your foreign U.S. company to that entity, creating a bunch of additional complications. Those complications could still be worth it, but this is sort of the point of why leaning into the U.S. tax code is can be helpful, because when there are changes, the changes will always help the people the tax code has helped, and it will always hurt the people who it has hurt. And so let me give you the example of what I'm talking about. I mentioned this earlier past year. One of my associates who used to work for me, he's moved on to a new firm. I'm still in contact with him, Robert Hansen, and he has done an incredible amount of streamlined disclosures over the years. And so generally, for our firm, we represent individuals who typically didn't have any tax planning, and they typically weren't doing things right. And what we could say is that, from our experience working with the clients in our firm, is that the IRS can be incredibly aggressive, stupidly aggressive, mind-bogglingly aggressive, cruel, heartless, brutal, especially, and we'll be talking about these a little bit, especially when it comes to assessing foreign penalties. If you look at the history of if you look at the news of who gets hit with big FBAR penalties, you'll notice a trend. They're all over the age of 70. The IRS actually likes to attack people who are near the end of their life with these onerous penalties because they know they're not going to fight back as hard. And they know it's an emotional time where they're weakened, and they know it could create disputes in the family and kids and this and that. And so it's really a great target for the IRS. Individuals who are not big fish, but they had something a little wrong, and then the IRS drops the boom on them. And those are generally the kind of cases that we get, and we try to fight every way we can to lower those penalties and advocate on our client's behalf. Now, Robert Hansen, who is now at a new firm, he says, well, now he has mostly corporate clients. He has mostly corporate clients as his clients. He's working on it, and he just laughs at me. He goes, Anthony, you're not going to believe the night and day difference between when you're dealing with individuals, how the IRS treats individuals to how the IRS treats corporations. He said to me this, and if you know this channel, we cover a lot of 54 and 5471 penalties, controlled foreign corporations, and there's $10,000 penalties assessed immediately, and they can go up to $50,000 if you don't get back in time. We've had clients assessed $500,000 in 5471 penalties, sometimes for entities they never even owned. It doesn't really stop the IRS because that's how aggressive they are. But in Robert's situation, he says it's amazing. He goes, I'm representing these foreign corporations around the world, and then an IRS examiner will reach out to them and say, hey, by the way, we noticed that you're missing a Form 5471 on one of these entities. And he says the IRS couldn't be more friendly, more polite, and they'll say, and they give you time. They'll give you time to file the 5471. They don't assess a $10,000 penalty and say, hey, then you file it. It's like, no. Oh, take your time, Robert. I'll get back to you. When you get a chance, can you file that 5471? And so that really sort of demonstrates the disparity in treatment. When you're big, you get great treatment. When you're little, and you can be, when you're perceived to be little, when you're perceived to be a juicy target for the IRS because you're perceived not to have the backup and the wherewithal that a larger taxpayer would, that's when you get the abuse. And this is a trend I've been seeing in my 20 years of doing this. This is something that wasn't apparent to me when I started, but now becomes incredibly apparent that those who get the protection of the IRS are those who take it very seriously and do everything the right way, and actually will go and structure things in a way to make themselves appear bigger, to appear as a bigger threat. The IRS has this, and this is really what it comes down to. And this is what it comes down to: the IRS's limitations. The IRS has severe, significant limitations. If you think foreign taxation is difficult for you to understand, imagine yourself an IRS examiner, because whatever you come up with is going to be challenged, and you really don't know what's going on. There's too much to know. And then the fact is, a lot of IRS examiners avoid these cases, and they can't. So what they're looking for is easy cases. And those easy cases are penalties, right, John? Right, Keith? Those are the easy cases, are penalty assessment of individuals. There can't be an easier case for the IRS. Can you guys think of something better for them than saying, hey, here's an FBAR that wasn't filed? Can you think of a better situation for the IRS when here's an individual who didn't file a 5471? Here's someone who didn't file an 8938. Can you think of any situations that are better from the IRS when we look at their time commitment to get their time commitment required, the training of their employees required, and the result they can obtain? When we put that in perspective, can you guys think of anything better than foreign penalties for the IRS to go and assess?
No, but all I can say, like with the how do I put this? The FBAR cases, one would think those would be the easiest to do, but then when you look at the overall figures, there's not many people filing FBARs, and so it makes one question why is that? Is it because that the IRS doesn't enforce that, even though they've been delegated to enforce it? But when you look at the latest figures, when you take a look at Americans at home and Americans overseas, the amount is minuscule compared to how
Yeah.
many people actually have accounts. So I don't know. I mean, it's almost like I hear what you're saying, Anthony, but it seems like the things that are really the low-hanging fruit, they don't even go after that sometimes. Or
Wow. Yeah.
or how do they ascertain which of those low-hanging fruit they go after? Is there criteria for that low-hanging fruit?
Right. And so Keith, and thanks, Keith sent over the stats, and these are the stats from 2022. So in 2022, we had about 1.5 million FBARs filed for individuals, and then about $70,000 for entities. So a huge difference, right?
Right. And those individuals, just to keep in mind, sorry to interrupt, but those individuals are individuals who are in the United States as well as outside the United States.
Right. So that's just on expats, but that's anybody. And so, I mean, that's, when you think you have, when we have about 200,000 or 200 million filers overall in this country. And it seems like, well, I think more than 0.5% would have a foreign bank account over $10,000, because that's basically what this is saying.
Yeah.
Right. My quick math in my head is like, yeah, you're saying, yeah, that. So you're right. And I mean, here's some wild, here's some incredible data. And then we can even go back in time to say, here's some people the IRS has caught and they can totally go after, and they say they're going to go after, and then they don't. And those were, again, this is something the IRS, in 2012, 2013, there was about 10,000 people who made soft disclosures the IRS wasn't happy about because they escaped without paying a foreign offshore penalty, and they avoided the offshore disclosure program. The IRS the IRS said, hey, we've identified 10,000 of these individuals, and now we're going to come after them with everything we have. Funniest thing happened, though, they didn't. And I do believe the reason why, though, in those cases is because, and here's why I would suspect it didn't happen. Because while the IRS was going to, yes, there was all these FBAR penalty bonanza that they could have gotten with going after those 10,000 employees, something else came with it that they would have to audit, because there's no way that they could audit the FBAR only and not look at the tax return. Well, a lot of those, and this was something that I think the IRS, bit off more than they could chew, because a lot of those people back then, they were using UBS, and they were using the UBS client services. And what the UBS client services were doing is they were managing portfolios of mutual funds and stocks on behalf of their shareholders in the US. And those shareholders, and that right there is what created a private, that's what I believe created the PFIC. And the PFIC reporting was so onerous and so demanding of their most experienced staff that what happened was that they realized, like, we can't get to any of these, because below all the FBARs is this incredibly onerous work. And just to give you an example, I had one of these PFIC cases back in 2010. And, our own accounting team was working for a couple of months on it. And the IRS had a GS-13, the highest level examiner. She spent about a month as well. So I could just imagine, yes, you can assess big penalties, but the IRS simply did not have the manpower. And I would say this still doesn't have the manpower to audit. They can't. And I think that's the whole point, that the protection that these people had from getting audited was the complexity of their tax return.
Right.
And that's exactly my point.
Yeah. And maybe you can educate me on this, is that for audits of an American overseas who's in the system, let's say you get audited, doesn't the IRS examiner also have to take a look at, let's say, their French tax return in concert with their US tax return, to see where there are potential problems? Is that a fair statement?
I don't see how you don't, right? So now you have to be an expert.
My question,
right.
you have to know French.
Right.
You'll have to know the French system. You'll have to know the German system, the Japanese system.
Yes.
So that also puts up some hurdles there.
Yes. And here's another great example, Keith. You're reminding me of a story from years ago. This was in 2008, and I think it was before. It was something a revenue officer told me in 2008. A great revenue officer. He retired years ago. This was before I got involved in anything international. He told me something very interesting. He goes, Anthony, I want you to do something for me. He said, I said, what's that? He said, I want you to, he goes, you have a list of all the federal tax liens filed in the country. And I'm like, and I did. I had the list of every tax lien that was ever filed, in the country. I was like, it was this incredible database. He says, I want you to go in that list and tell me how many Chinese surnames you find in that list. And I went through and I went through a massive list. I said, I think I found 2. And he goes, do you think that's all? Do you think that's all the Chinese people, do you think that's an adequate representation of the Chinese population? And I said, no, not at all. I said, there's far more Chinese, they don't seem to be getting a lot of federal tax liens at all. And he goes, well, I'll tell you why. He said, because there are no IRS examiners who can audit, any Chinese books. He goes, it's not done whatsoever. That, a Chinese restaurant, they do their books in a way that, the IRS doesn't understand. And so that the IRS just lets them go, that they're never audited because they don't have someone who can actually understand what the books are. So they're never audited. They're never sent in notices of deficiencies, and they don't show up on federal tax liens. And that was just a lesson I learned. It was their language, the language protected them from the IRS, and the complicated language protected the IRS. And that's the philosophy that I'm asking people to adopt, that if you are going to be in the US system, how do you make it so that, oh boy, picking up this file is way too much work. That's too much. And that you're trying to keep your file as big as imposing as possible, and then let the IRS find like, oh, here's someone simple and straightforward. Oh, good. Thank goodness. Because we need that. We need something as simple and straightforward. And this is the whole idea, is that you want to out IRS the IRS. The IRS is a terrible thing for us, of course, but it's also a terrible thing for the IRS. And that by fully embracing it, well, now you fully embrace their own complications that they will admit in part to not being able to handle. John, what do you have to say to
that? Not a lot.
No.
I think it's fairly obvious that to audit anything effectively, you have to understand what it is you're auditing. I think clearly. On the other hand, I think it's very easy to assess penalties without having the vaguest idea what you're auditing.
There you go. Yeah.
Things like FBARs or the absence of a 5471. I think a point that we've made from time to time in our discussions is the value of the information returns is rarely in the filing. It's in the non-filing.
Right.
Which opens the door to a lot of penalties. And I have no idea, if there even is, a general IRS culture on this or not. But I think that in regard to the question of to what extent do you have to look at a foreign tax return, non-US tax return, or that, I think it depends what it is you're trying to do. If you're just trying to run up penalties with the absence of information returns, that's pretty easy. Probably you need the information on the business entity. If somebody had filed a 5471, you wanted to impose a penalty for non-substantial compliance, then I think you do. But I would agree that the way I have come to see the U.S. tax system, I think that it's partly about the collection of tax, and I think it's partly about the collection of information through these information returns. For anybody who has any connection to anything that's non-U.S., I think the information returns are usually the bigger issue.
Yeah.
And it's easy to assess penalties. However, this 2023 was a very, very good year for taxpayers, who are being hit up with information return penalties.
Yeah.
We had the 5471 decision to the effect that they weren't assessable penalties.
That was a great decision. Yeah, that was a great decision. And that was bad news. That was terrible. And the IRS is fighting that tooth and nail, because that was because what happens, and this is just to give you guys an idea what happened in this year, is that we had a court rule that the Form 5471 wasn't the kind of penalty the IRS can automatically assess. Like, it can assess like the failure to pay penalty, failure to file penalties, the penalties that get assessed with your return. They actually said, hey, look, this is a penalty that isn't the kind that can be assessed like that. In order to be assessed, you have to bring a whole court procedure. So you're going to involve at least, you're going to involve the, a United States attorney and a team of people to bring these suits. Well, okay, well, we just took an easy penalty and we made it now incredibly difficult, because in that court, the taxpayer can bring all the defenses they have, and there's just things that the IRS can't do automatically. So that was actually a huge decision, and we'll see what happens there if that decision's upheld, or if the IRS finds another way, a way around it. But honestly, the threat is honestly enough to scare a lot of people, and to frighten a lot of people. And I think often in a way too, is that, I think ironically, the IRS being so aggressive with those overseas, I think has a countervailing effect. That people are, okay, well, I'm not gonna enter this because I don't trust you. I think there's a lot of that, which might be a good idea there too. We deal with a lot of people who don't enter into the U.S. tax system, and we advise them to stay out.
Well, Anthony,
yeah.
A couple of points here. First of all, the 5471 decision, the reasoning would apply to other information return penalties as well.
Yeah.
I think Form 8938, I haven't looked at that for a long time, but the decision laid out the criteria for how to decide what is or is not an assessable penalty. And my recollection of it is that 8938 would have been subsumed into that. I think the 5472. So that was quite significant. The Bittner thing was very helpful. The Supreme Court decision in Bittner limiting the penalty to $10,000. Whatever the inflation adjusted value is of the $10,000 civil non-willful penalty. But there have been some others that, and again, I never know what we're going to discuss, so I don't know the names of these cases, but there have been one or two in the last year where courts have ruled that the issue of willfulness or non-willfulness is a question of fact. And as long as there's a reasonable defense raised on the issue of willfulness, it has to go to a trial. In other words, the IRS can't just assess this stuff. So, we're beginning to see cracks in the armor.
That's a good way to think of it. Yeah, you're right.
The taxpayer advocate, is her name Collins? Miss Collins, wrote a very, very helpful and interesting series of blog posts, which were at Tax Connections, possibly other places, talking about the problem of these international information return penalties. And to your point of, do they actually have the effect of keeping people out of the system? I think probably they do, because it's really, I don't know of any other way to say this, okay, but the people who get the penalties for this stuff are the people who tend to file to correct mistakes in filing, right?
Yeah.
And that seems, there's that Philadelphia police officer's case.
Yes, the Polish immigrant. Yes.
The guy who tried to, realize a few years after the fact that he should have reported the gift from his mother on a 3520. I mean, the guy had even made inquiries to his tax preparer at the time, which said, no, it's not an income issue. There's nothing to report.
Yeah.
So he goes out and says, oh my God, I made a mistake. I believe in compliance with the law. Here I'm going to file this. And they promptly responded, well, thanks for the opportunity for a 33% penalty. This stuff is, really pretty bad. Okay.
Well, you know what, John, I guess I didn't think about it from looking at 2023 from the IRS's perspective.
It was not a good year.
It was not a good year for them. And, and I think where we left off on the year was really, I think in the Moore versus U.S. oral argument. The problem or the opportunity, and I would say this, look, regardless of how the Supreme Court rules, what we discovered in, how the government looks at us is pretty disgusting of how, what the government believes. And so that the government said, you know what, you don't have income. You don't need to have income to have an income tax. You don't need to realize any income for us to tax you on your income. And, they got out there and they said that, and they said that no problem. They said that easily. And they said that,
Well,
that's always been the case.
worse. It was even worse. The Solicitor General, in oral argument, basically said, we can tax you just for existing.
Yeah.
Okay. I mean, it was far worse. And, I remain committed to the view that the Moore decision is probably the single most important decision that the Supreme Court will ever have ruled on. And I think that,
Yes.
I'm reading all this commentary on this thing, and it's really disgusting. Okay. I mean, I will repeat it. It is really disgusting in the sense that, it doesn't recognize the huge difference, to your point about the treatment of individuals versus corporations. I mean, the whole thing took place in the context of the corporations when in fact, the Moores are individuals. And in fact, the largest number of people impacted by this are individuals who are Americans abroad. I mean, it's totally disgusting.
Yeah. And I would say, we're expecting the Moore decision to be in May or June of this year. And I agree, it's going to be the most important decision of all time the Supreme Court will rule on. And it's like, regardless of how it comes out, we will have clarity. We will have clarity on exactly what it is we are as citizens. If the government, if the government gets their way, that's it. It doesn't matter. It doesn't matter whether you have income or not. They can just go by and grab anything they want. If there is a limitation of it, if there's a limitations, well, there's going to be consequences, because there's a lot of instances where the IRS taxes non-income events, and their hearts are going to be broken if they lose that, because taxing non-income is what the IRS loves to do.
Well, I don't think you're gonna lose on that point. I mean, this is a much longer discussion.
Yeah.
But the upshot of the thing, I think, in part, is that the things that most people thought didn't matter, things like retroactivity and is it reasonable to impose income attribution on a minority shareholder, really became, I think, a significant part of the discussion in oral argument. So, particularly on the retroactivity issue, it seems to me that gives the court an out. Okay.
Yeah.
Leave the same and just say in this particular case, the retroactivity violates due process. But that aside, let's say we broaden this discussion a little bit, which, if you'll allow me to do just for a second, we talk about, this issue of what does the tax system tell us about, the importance of individuals in the United States. Let's move it over to the political process for a minute. Right. I mean, the tax system is clear evidence that individuals don't matter in the United States. Okay. I mean, individuals are not part of negotiating the TCJA. There was not a single corporation, you'll notice, okay, who filed an amicus in support of the Moores, right?
Yeah.
Why? Because they were part of the process. But, we see the same thing in the so-called democratic process, is that individuals, the whole political process, American democracy, is now monopolized by the Democrat and Republican parties. And, it's all about party warfare and partisanship. And, not only does it appear to have nothing to do with individuals, okay, but the only say that individuals even get is, they're told here, go ahead, vote. Okay, you don't.
Yeah, right. Yeah, right.
You don't matter, but
right.
Go ahead, vote. And you look at the whole, we see this, and this is really being played out, big time in so many ways as we move into an election this year. I read a fascinating article on Substack this morning, written by former Attorney General Mr. Barr, who, and I totally agree with him on this. By the way, I repeat, okay, I'm sort of an independent. I'm not a huge supporter of any of these political parties, but the point that he makes is that, and I agree, that these decisions coming out of Colorado and Maine to bar Trump from the ballot are an insult to the individuals of this country. It's saying, well, we're not going to let this be part of the democratic process. We're not even going to let you vote on this. Et cetera. And
well, the quote I saw was if elections actually accomplished anything, they'd be illegal.
Yeah. So really, this is part of a broader discussion of do individuals even matter?
Yeah. Well, I'm curious for many of our listeners if they would sort of agree. I think what you're getting to is that more people know what the truth is than ever before. That regardless of the decisions, how they go out, I think more people see. Now, maybe this is just my own bias too, as I've sort of looked at, it's a uniparty in Washington, D.C., and they pretend to be they pretend to be at war with each other. But boy, they find common ground when it comes to their tax code. Boy, they get to, the bickering goes away, because one thing you never heard from Democrats was how unfair Trump's transition tax was to individuals. You would think that would be, hey, look, Trump gave you an issue right here that the corporations didn't have to pay, small individuals like the Moore had to pay. You would think the party of the supposed little guy, like the Democrats claim to be, would make political hay out of that. Say, hey, what are you doing here? This is another Republican giveaway to rich multinational corporations. You would figure that would be, they wrote the script themselves, but what you heard was none of that. You heard, this is an important tax that everyone needs to pay, and it's totally normal for us to do this. What's wrong with you? What a strange world where you had the Democrats arguing tooth and nail, and they still are, for Republican law, not ignoring the entire, the entire class warfare that's inherent. Well, I don't even know if it's class warfare because it's individuals versus corporations, but ignoring that. And that is there you go right there. Like that is such a great lesson to learn. As long as the Republicans pass a law that destroys individuals, you can count on the Democrats to support it.
I think that's right. It's not. I mean, I think what it really is, it's not so much a case of individuals have to pay the tax. I think it's actually far worse, right? Because if you look at something, you say, well, individuals have to pay the tax. I mean, at least you possibly considered the issue, right, in terms of public policy. But what's worse about this, it's that individuals are so irrelevant that we're not even going to consider how this affects you.
Yeah.
It really doesn't make any difference because you don't matter. Your only role as an American is to vote, like a trained SEAL, for your, I mean, that's what your role is. You don't matter otherwise. And this, by the way,
vote for us.
This is the reason why Trump continues to have success. There are many, many Trump supporters out there who don't like Trump, who really don't. But what they understand about Trump is that he has created himself in a way so that he is how people who feel, whose instinct is they no longer matter as individuals, that is how they express their frustration and their contempt for a system where the individual doesn't matter. You just vote for Trump. And you see, the more that, the political process is weaponized against him. And I believe, and I do believe, I am in the camp that I think it is being weaponized.
Oh, completely.
I mean, there are plenty of people who deny it, but it's interesting to me that the more that this happens, the more his support seems to solidify, and the more, somebody who I used to think did not have the capacity to build his voter base, I think is starting to build his voter base because many people see the current system as so dangerous to their survival.
Yeah.
That any way they can to express their discomfort with it, they will take. And, Trump happens to be the vehicle to do that. And that's, what I sort of see as happening here. I mean, whether, he can win a general election or not, I really don't know. But it is absolutely disgusting that, these courts and government agencies, can sort of take steps to remove the political decision of whether Trump should be elected from the public.
Yeah.
I mean, that's what we're really doing. And, I'm not, I'm, as you probably have figured out, I'm a huge supporter of individual rights. I'm not a Trump supporter particularly, but I will say this to any Democrats who are listening. If the Democrats really want to get rid of Trump, they have to start running the Democratic Party in a way where individuals have a choice in selecting who the presidential candidates are.
That's not allowed.
Well, Hillary hasn't had a chance yet, and Joe hasn't.
No, right? Yeah, they all have. Yeah, they sort of they bypass the democratic process. I've noticed a little bit in those conventions.
They are the antithesis of the Democratic.
Yeah, and I think it's we have to, and this is sort of where we are. It's like we have, I think 2024 is we're going to see some massive changes. More is going to be something, right? And one way or another, in we have the election coming up, and this sort of we have this challenge as individuals. We have to live our lives today, and we have to make the best of today. And it seems like we have a tremendous amount of political uncertainty in 2024. I mean, it could be. I could see kind of either eventuality. I could see someone picking me up at the end of the year to bring me to some concentration camp, or I could see relief in prosperity like we've never seen before. And I'm not sure which way it's going to go myself. Well, it seems like
it could have both, Anthony.
Yeah, right. It's like, yes, the answer will be yes.
Both, yeah.
Well, and then one of the things that one of the trends that we've had, and I think one of the things that we've talked about on this podcast is that we're often in a position of that nightmare where you're trying to scream to somebody, there's an issue going on and nothing's coming out. You're trying to scream and you're trying to warn people about, hey, look at this craziness, what's going on. We got to do something about it. Something really bad is going to happen, and this is just going to go down this road. And we've been screaming about it, and we've been saying, hey, look, everything that happens overseas to Americans overseas, because they are not a political constituency that can intentionally are beat up overseas, those are individuals. And what happens to individuals overseas will happen to Americans here eventually. It's going to happen. What they do overseas is a trial balloon for what gets enforced in the US of A. Now.
Well, Anthony, I mean, on that.
You read? Yeah, go ahead. Go ahead, John.
I think before the holiday season we did was the whole PFIC thing. And
yeah,
one of the points that I think we made, but it's worth making again, is the whole structure of the Weidens proposed wealth tax is based on the PFIC system and the taxation of Americans abroad.
There you go.
I mean, it's incredible.
That's right. That's right. Thank you. So, and I wasn't even thinking of that one, but you brought that up. That's right. The passive foreign investment company taxation regime is so incredibly complicated. And that's what I was mentioning at the beginning of this podcast. The IRS had these people with unreported income and they didn't follow the right thing. And they could have gone in there, audited them and assessed them with millions of dollars of penalties. These people would have owed big time. And the IRS didn't, because the passive foreign investment company taxation regime is so hard for the IRS to follow themselves along with individuals that they simply say, oh, we can't, or we're just going to move on to something else a little easier to assess. That's how crazy it is. And so now Ron Wyden seeing this incredibly aggressive and the way, and if you want to check out that episode where we go, John does a great job going through the three awful ways that PFICs are assessed. And so there was a trial balloon. And went overseas, okay, we can kind of enforce it. Now the IRS knows where the weak points are. Now Ron Wyden, wouldn't you know it, he's proposing PFICs for all Americans. You have no idea what they want to do. You have no idea. Well, actually, if you're watching this channel, you do. You do have an idea. You have a great idea. You're one of the few who do. And that's coming up. The one I wanted to talk about, though, unless there's something else too, maybe Keith, John, you had something else that came up this year. The big one that I want to talk about this year is the FATCA, the FBAR. For Americans. Welcome if you're just learning about this one. For year what's that, John? I missed that.
Welcome to 2024, the greatest IRS penalty bonanza in history.
There we go. Yes. So we have entered it because the FBAR, while it allows for big penalties, it only applies to account holders, people who have a signatory authority or a beneficial ownership in a foreign bank account over $10,000. So that doesn't really hit enough people, right? It doesn't really hit enough people, doesn't hit enough individuals in America that could be assessed at least that $10,000 penalty. So what did they do? What did our Congress do to make sure that the trial balloon of the FBAR overseas, which is enforced by the Financial Crimes Enforcement Network, we want to put that as a criminal form. The FBAR is a criminal form because it's assessed by the Financial Crimes Enforcement Network. Well, the Financial Crimes Enforcement Network has a new form. I don't know if you heard about this one yet. Maybe you've ignored it. I've been sending emails out on this one, but it's the Beneficial Ownership Information Form. And I keep telling people about it, and no one even knows it's here because there's still time to do it. But if you own an LLC, an LLP, a corporation, any small entity, mostly any small entity that's registered with some state Secretary of State, okay, guess what? You now have a mandatory reporting requirement. You have an affirmative duty to disclose the nature of your ownership in your entities to the federal government. You have to report this on a beneficial ownership information form, fileable first time in 2024. Now, here it is. You ready for it? Your failure to file is a $10,000 penalty. So this is the extravagant, the smorgasbord that they will be able to go and assess, because many people have entities they forgot about. Many people, they filed multiple entities. Oh yeah, I meant to do that. Oh yeah, right. Oh yeah, I had that nonprofit. I forgot. Oh yeah, I had that. Well, I didn't get that. What did I do with that? Oh right. So there's all these entities over, that people have forgot about, and then people are still using. They just don't know the form. And so the IRS is going to look forward to 2024 of this. This is what they've been waiting for. And so this is it. The FBAR has come home to roost to Americans. And we've been warning you, hey, you want to maybe support us, but it didn't affect you directly, so you allowed it to go through. And there it is. Yes, Sensei Joe says, Homeland Americans think they are great and safe all the time. Well, guess what? The Financial Crimes Enforcement Network has a message for you.
So,
you better file your form. Go ahead, Keith.
Yeah, I have a question on this. So how will this affect, I'll do my best to answer, to pose the question. How will this affect shell companies in these states? Because, there are, and I know people who have done this, where they have set up shell companies in particular states because it can be quite anonymous. You know what I mean?
Yes.
So how will this affect that, or will it?
Yes, so that totally affects it. And so now, and this is what we talk about when we talked about earlier, leaning into the U.S. tax code system. It's like, okay, great. You created your foreign, you created a shell company that will own a foreign corporation. Great, wonderful. Now there's a new law. Now you got to make sure you report. Now you have to report ownership of your domestic U.S. company that owns all of these. Otherwise, you'll be assessed, or otherwise you could be assessed a $10,000 penalty per each year that you haven't done it. Now, this is what's. Yeah, and so the only state that has real secrecy, that has probably the best secrecy, is Nevada. Nevada has the best secrecy, and so I talked to one of my connections at the Nevada corporate headquarters, one of my friends there, and I said, well, so what are you guys doing about this? This seems like this destroys the whole anonymous sort of nature of having a Nevada corporation. So how do you guys feel about this? And he goes, yep, well, yeah, you're right. It kind of does. So right now, the issue is like, so now there'll be a database, there is no way, if someone owns a Nevada corporation, really, they can keep that information secret. They can from you. Now, the only issue is they can't keep it secret from the U.S. government anymore. So now what happens with that database? I don't know. But what we do know is that, yeah, go ahead, John.
Yeah. I mean, let's look at this from the point of view of Bloomberg yesterday. I saw a couple of articles about how bank deposits in Miami banks have increased a great deal over the last year, from Latin America, et cetera. And, they didn't mention, of course, the fact that the FATCA agreements don't require, basically, it's still quite possible for non-resident aliens to hide assets in the United States, okay, because of the fact that the U.S. hasn't joined the CRS. What it means is that it can't be secret from the United States. In other words, if you create an entity in the U.S., it cannot be a secret from the U.S. government, but it surely can be a secret from
Yes.
other governments, right?
Right.
Right. There you go. Perfectly said. And then also it will still likely be from any potential claim
So,
holders. I don't see how anyone would get access to that database.
right.
Now, what happens with
So,
all these databases is they always get hacked, though. That's fun. That's what's fun. That's
right.
what's so we create these
So I have,
databases get hacked.
well, I got a question for you. So with this new change, so that means the U.S. government will have this knowledge, okay? What are the ramifications of that if when that's exposed?
I was going to
So,
ask you. I don't know if I know the answers. I mean, what the ramifications are, what I would imagine, is that the financial, the IRS won't start assessing these penalties probably for a few years.
no, what I'm asking, Anthony, is not so much on the penalties. Is
Okay.
that now that let's say, you have a shell company in Delaware or whatever, and
Yep.
now it has to be reported to the U.S. government, okay?
Yes.
So that means that John Smith, now his name is exposed, and John Smith lives outside the U.S.
Okay.
What
Yep.
happens as a result of this change? Not because it's been reported and you fill out the form. So what's different in John Smith's world now?
Well, yeah, and I would say it's sort of the same philosophy of what we talked about FBARs and 5471s. There's no value to the filled out form to the government. The only value is the one that isn't filled out. So the person who
Okay.
fills out the form isn't going to experience anything differently. There's not, it's a form that's going to go, and I'd imagine, to a relatively secure database, which still can be hacked, like the OMB database
Right.
was in 2017, and no one was ever punished for. That there really shouldn't be much change in anyone's taxation rate, anything like that, or even audit rate. That this is just a form that they'll go through. I'm imagining they'll go through, their AI form, and really the first
Okay.
place that they're gonna, and actually this is what I would say if you think about it, that you probably still are better off with a place like Nevada, because if I was the IRS and I was going to try to say, hey, look, I want to go and assess these penalty forms against a whole bunch of people, I want to assess as quick as I can, what I would do is go to all the Secretary of State websites where the ownership information is public. Like, it is public. You can find out, state of Connecticut, you can find out at least the first four members of the account. And most of them you can do that. So what I would do is I would say, okay, look, I would create an AI program to go and scrape all the states who have publicly released their all their members. Then I would compare that with a list of who has filed. And then I'd say, okay, who hasn't filed? Okay, that's who I'm going to go after first. So actually, I think that Nevada, because they actually don't publicize it, will probably be the one that would get the least scrutiny, because the IRS would have to spend a lot of time to find out, okay, who actually did file in Nevada, because you need to compare two things. It's like, yeah, you filed a report, but I need to know who should have. So that's why I would say it's probably still, in practicality, Nevada will still be the better one to be with, because again, if you just apply, if you were trying to figure out who you would penalize, how would you go about doing it on a massive scale? And well, I mean, because the thing, for most part, this information isn't needed. You know who the beneficial owner is. It's on the state website. You say, oh, okay, that's who the beneficial owner is. It's not in every case, and certainly in things in trust, it doesn't tell you who that is. That's interesting. Trust doesn't apply to that. Oh, by the way, you're not going to believe this. You're not going to believe that, but big, massive corporations are exempted from the beneficial ownership information form. You're not going to believe it. Yeah, I know. I know. They're exempted. They don't have to do it. No. They're set. It's really just the small people. Those are the ones who have to do it in typical fashion. Yeah. Okay. Here's a question. Yeah. Go ahead.
Loss of anonymity. Okay. Clearly, it'll be interesting to see where this goes. I mean, a number of Canadian provinces have, I think, similar rules that require not only filing but updating, this kind of ownership information for all incorporated companies. It's I mean, it's not a good thing, okay, generally for, sort of individual rights and privacy. It probably still protects somebody who wants to, hide the extent of his or her assets from business partners or family members or something. They're probably still okay.
Yes, I think so. Yeah.
But it's one more, it's one more, sort of increase in control over everything and everybody. And, I'm not sure that it's really worth it. I mean, is there really anybody outside the government who would say, wow, this is good news?
Yeah, no, I don't think anybody would. No, I don't think anybody would. Oh, no, I mean, outside the government, I mean, people in the compliance industry. Hey, look, this is additional things, and we'll be doing these, we'll be doing these ourselves. Melvin asked this
On that
question.
point, yeah, on
So
that
it's
point,
just,
that's really interesting because I sent this to you. I thought, well, who's already in this space, drumming up compliance, and
yeah,
and there are people who, it's like, with FATCA, people would say, wow, it's the gift that keeps on giving, for the compliance industry.
yeah,
And I think that this is going to be true as well, because although I doubt this is a complicated form to complete, I doubt
it's
it.
not. It's actually not. It's not. I've done it. I've gone through it. It's not a hard form to complete. It's not.
Yeah, but there's still a lot of people who are going to be, so nervous about it that they're going to want to get, professional help.
Yeah, no, and then on the right, and FBARs, I put up a guide how to file your own FBARs. You know what? People still call me up to say, "Hey, I want you to do it." I don't,
You know what it's going to be? It's going to be the type of thing that, where whoever does the taxes for the entity at the end of the year, it's going to be an add-on thing.
I think so.
Going to
Yeah,
raise the cost of compliance to some degree.
I think that's going to be, and I haven't checked our software, but I think that's just going to be an add-on they put on, because you are just basically taking information from a tax return and you're just putting it into a different form and it's going somewhere else. It's really information. It would be on a business tax return. Would be on your partnership return or S corp return, who actually is taking the income. So the question from Melvin is this: do you think the IRS will assess penalties for not filing a new beneficial ownership form as brutally as they assess FBAR and foreign info reporting penalties? Well, I would say this: it's like, well, it's not as powerful as a law, Melvin, because there is no 50% of high value balance because it's a business. So, a lot of these things don't have much value at all. So they can't assess it as brutal because the maximum they can assess is $10,000 per each year. So now the question is, well, how would they do that? Would they just start, would the IRS start looking in 2025 to say who didn't audit in 2024? Well, maybe not. And that if it's an automated process, maybe they would send out a letter to say, hey, look, we know you have this, get this done quickly. Otherwise, we'll assess you a $10,000 penalty. I could see them doing that because it's a follow-up to your next question. Your next question was, do you think there'd be a backlash? So I think if they did a letter with a warning to say, hey, look, you better do this. Otherwise, we'll send you, 10,000, we'll hit you a $10,000 penalty. And, like a lot of doesn't, just because the IRS sends a notice doesn't mean someone reads it, especially overseas. So they could at least say, hey, look, we warned you about this. So now we're going to assess you. So what are you going to complain about? So, and this is more my thing. Would the IRS come and assess you for 1 year or would they intentionally wait until you have multiple years to penalize you with? Because that's what they do. Because that's what the IRS does. That's how they audit. They wait for you to make a big enough issue out of something so that when they go to audit you, that there will be a change. What the IRS doesn't want to do is tell you something. Hey, last year you did something wrong. Oh, what's that? Oh, you did this wrong. Oh, okay, let me go fix this. Oh, okay, looks like I owe you a little bit of money. The IRS doesn't like that. They want you to go down the wrong path, right down the wrong path. And then out of the blue, they say, hey, let's see how you're doing. Well, you've been doing this wrong all these years. Why have you been doing this wrong all these years? And, people didn't know. So I'm not sure exactly how that's going to play out. I mean, I can speculate either way. Will there be a domestic backlash? And I think, that right there makes me think they would send a warning letter out first to sort of because if they start throwing these all around, that could be a significant amount of people like, what's this all about? Why do we need to invade our privacy? Especially, this is really the ridiculousness of this. We have insider trading is completely allowed if you're a congressman. And there's credible claims that a lot of our congressmen are blackmailed, significant blackmail. And that's why things are so bad. So it's like, well, I think we'd be better off as a country if we had transparency over our government, other than transparency of us. I want transparency of our government. Yeah. I want to know who's blackmailing who over what. I think everybody in Congress should have to certify each year that they're not under blackmail or under any undue influence. And that's something,
Anthony, take a look at Form 6 down in Florida, because starting January 1st, yesterday, any elected official has to submit Form 6, which outlines every single type of deposit or anything. And as a result, many politicians have resigned.
Wow, what a coincidence.
So look it up, because that is what's occurring down in Florida right now, on the heels of what you were just speaking.
Oh my God. Well, here we get a screen share of this up right now. Oh my God, that's amazing. Let me get this up here. Wow. We got this up. This is it. Wow. This is what I want to know. Right. This is what I want. Why do we have to let them know? No. You guys let us know. What is your net worth right here? Liability.
Where are you getting your money from? Where are you getting your money from? Yeah.
Who are the people who are blackmailing you? Why? What did you do? That's your liability. We need to know about that. Exactly. This is what we need. Wow. This is a great, wow. Wow. You certified, you completed the training. Here's your oath of office. Oh, wow. All right. And prepare. Okay. If someone else prepares this form to you, guess what? They're not responsible. You still are. This is a great step. Wow.
This is what should be done nationally. You know what I mean?
I think this is our great takeaway, guys. Yeah, I think this is we want to get Form 6. All right. Well, this is our I think we got our action step here, guys. For 2024, here is a solution that's much better than what the government wants to do to us. No, government, this is what we want to know of you. Why are you making the decisions that you are? This will help us determine. And if failure to file this form out, I think should come with a penalty that would exhaust your wealth, would give you nothing left. Who must file? Form 6. Yeah, we need to get to every government employee needs to fill one of these out. Every single one.
Every government employee.
Every government employee. Absolutely.
Yeah, this is only specific to Florida.
Well, think about what's asked of us as citizens. We can't ask the same as someone who's working for the government.
Yeah.
Everybody, I want to know, what's your net worth? Where'd you get it from? What's your deal? How'd you get in this? So what a wonderful way. So, all right, well, there we go. I'm going to try, we're going to maybe try to get some support on that and get people interested in getting. Wow, Keith, that's a great, thank you so much for.
Not doing bad for a layperson, am I?
Yeah, geez, Keith, this is beautiful. Oh my God, here it is. Oh my God. Well, this is wonderful. Well, we're going to conclude our first episode of this year. 2024 is going to be something really, really special. One way or another, I have no idea how this year is going to end. I really don't. I don't know where we're going to be a year from now. There's going to be a lot happening. A lot of updates. And so then I would suggest there's your call to action. Make sure you subscribe to this channel, go live, because there's going to be a lot happening this year. We hope to cover it. A lot of things that have been happening foreign are coming home to roost in the U.S. And the United States government needs to decide what it is. Is it going to make any claim to be that it's representing the people, or is it just going to say, you know what, the people don't matter, and we just need to get a new people in? So that got to be where it's at. We'll leave it here. I want to just give a shout out to my guests here. And if you are somebody who is considering renouncing your U.S. citizenship and you're trying to figure out if it's the best thing to do, what your best move is, or you're thinking about entering into the system and you're a little leery about talking to U.S. tax professional because you know that U.S. tax professional is obligated to tell you one thing, comply, but you rather want to get them sort of see what people are doing around the world. Well, what I would suggest is you reach out to our good friend, Keith Redmond, global advocate for the American abroad. He runs the American Expatriates group on Facebook. Now over 9,000 subscribers. Amazing, amazing group there.
Getting
a lot
close
of
to 10,000.
Whoa! Oh my God, we're gonna have a special celebration for that, Keith. We'll take a look where that's gonna happen. We'll have to have a special podcast for that. Reach out to Keith. Keith talks to so many people around the world dealing with the same struggles you are about what to do about this thing called the IRS. So reach out to him. Here's his email: US_overseas_advocate@outlook.com. Reach out to him. And if you are thinking about renouncing, if you talk to Keith and thinking like, you know what, the renunciation is a thing for me, but I have a complicated situation. Well, look no further than John Richardson. John helps people understand the multiple pieces at play, because the thing is, once you throw a solution out there, oh, how does that impact this thing and this thing and this thing and this thing? And it kind of goes on. So you really need someone who understands the multiple moving pieces that depend on who you are and where you're living and where your goals are. So reach out to our good friend, John Richardson, who helps us out so much, develop great content for this podcast. Here's his email: citizenshipsolutions@protonmail.com. And last but not least, myself. If you are thinking about it, if you're looking to be a guest on this channel, if you're someone with some experience overseas, if you're a professional, if you're a tax professional yourself, you have some insight into this, love to have you on the guest. We love sharing the wealth. We are all in this together. We are all individuals against something that is not representing us at all. Therefore, we need to unite. And that's the only thing that the government will respect is sheer numbers. That's a fact. Reach out to me if you have an issue going on, if you have an IRS problem, anything from an FBAR audit to something going on that you don't really appreciate, or you need some tax planning, some guidance on that. Reach out to me. I'm Anthony Parent, founder of IRS Medic, and I run the firm Parent & Parent LLP, a firm I founded with my dad 20 years ago. And so we've been having a lot of fun. And again, I want to just, please encourage you to subscribe and turn on those notifications, because this is going to be one heck of a year. And we'll be going live a lot. And when we go live, you can participate and comment like so many of our great commenters here. And yes, John is awesome. Yep. Sensei Joe loves John. We love John too. Keith too. And oh, wait, Melvin's got a comment here. And Melvin has a comment on Form 6. We just finished this. Oh, yeah, right. On the Form 6, yeah, 10,000 to 50% willful penalty. Exactly. All these things. We need to give the government what they're giving to us. Hey, look, if it's fair to do to us, why isn't it fair to do to them? And I think that's a great way. Let's hold them to account this year.
Yep.
Once again, concluding remarks, John. We'll go with that. We've gone over time. Might as well. If you have any concluding wisdom, John.
So my definition of wealth after all of this is the ability to live happily with very little. Okay? Because one thing that is clear is that, the purpose of all of this is, basically to take your assets. I mean, I think there's absolutely no question about it. That's what all these modern tax systems are designed to do. And, it's funny, when I was in law school, by the way, I had absolutely no interest in tax at all.
Same, yeah, I'm with you.
And this professor came in one day. I took this course because I had to on estate and gift tax. And he said, I can't understand why anybody would want to die with anything but debts. So I think that's good advice. Then you don't need to worry about it all.
There
right?
You go. If your true wealth is something that can't be measured with dollars, now you're winning.
You can even keep your U.S. citizenship.
There you go. Right. Just and I think that's a theme that I'm hearing from a lot of people is decoupling your definition of wealth from numbers, but something else. And I think that's the best way to go.
That's right.
Yeah. All right. This is Anthony Parent, IRS Medic, for Keith Redmond and John Richardson. Thanks for watching.